My name is Akhilesh, and I couldn't have been happier but to have this wonderful set of panelists with me here. Makes my job very, very easy. Although we are talking about 100 million borrowers to be added, looks like each one of you will have to bring about 5 million borrowers, given that we have such few people in the audience right now. Okay, all right. So the first thing I want to start with is a confession. The confession is that I've been chosen to be the moderator of this group. And they say the person who has the least amount of content is made the moderator because he's allowed to make the least amount of comments. So the organizers did a brilliant job. They made me like a traffic light signal. So my job is just to make sure that I direct things, and all the great content is going to come from these wonderful panelists. I do want to highlight the jobs of moderator these days has become far more challenging. And I'll give you some data points I think some of you might have seen. If you just go back about 50 years, the average amount of time the music will play before the real song comes, which is called the prelude, used to be about 1 minute. So you'll have to listen to 1 minute of music before you actually get the hook or the sound or what you really get hooked onto. That was 1970s. If you look at the Chartbusters top 10 1970s, the average was about a minute. Today, the average prelude of a song is about 7 seconds. That shows how little patience do audience have for the useless music. So every time I'm moderating the panel, I feel like I'm the prelude. And the sooner I finish, the better it is for all of you so that you can listen to the real song. Today's topic is absolutely amazing. I think the topic is about how do we add 100 million new borrowers. The good news is that India is a country which is rich with its economic progress in the last few years, and credit has played a big role. We do have several hundred million borrowers already, but how do we add the net new 100 new million borrowers is a big challenge. I'm sure all of you agree that borrowing is a concept which didn't start yesterday. In fact, it started even before currency came in. Borrowing existed even before people could trade. It just right now hinges on the ability to trust somebody and being able to have the ability to provide them the resources which they otherwise don't have. And that is the real concept of credit, which is growing primarily because there is a need and there is also a supply of capital. Credit drives lot of economic progress, growth, allowing people to use capital for productive use and drive the economy in a very different manner. On the contrary, while we have had huge credit access, it's still far from where we would like it to be. So just as a data point, in India, the credit to GDP ratio is about 60%. And that number for a country like China is about 150%, and for a country like US is 190%. So we have a huge headroom with respect to the ability for people to use credit to drive productive growth to the economy. But having said that, there is a huge amount of effort which has been made both by the government as well as private sector alike. But we still think that next 100 million are not going to be those which were the previous 100 million and will be next new. So I want to start, Mr. Chakravarti, with you first. You've been in this industry for several decades, and you've seen not just the lender, but the borrower profile change over time. How do you see this change driving the future growth of next 100 million borrowers?
Thank you. Since you said several decades in the business, I still remember my first customer about 34, 35 years back. I had to spend a whole day because the customer was somebody who was running a floor mill. So floor and then, so I had to sit with her for a couple of days to understand her cash flows before I was able to take a call on whether to lend the money to her or not. And why does she need it? Because she wanted to buy a new mill. So I sat for 2 days to understand whether she can repay or not. Today, I mean, thanks to UPI, you have a fair bit of sense because a lot of today, if you go to any place, anything, it's all happening on UPI. For example, in August, we ended up having 20 billion transactions on UPI, which gives you a rich data to work with, understand the real cash flows. And for smaller merchants, if you look at smaller merchants, if they have a POS machine also, the UPI and POS together can give you a fair insight into their cash flows. So a customer where I was spending days to evaluate today, the time has shortened. I was able to make a quicker decision, better informed decision, I would say, basing on data. So the other point was today, the credit also changed because most of the customers are looking at, as we were discussing earlier, looking at contextual borrowing or say a need-based borrowing, shorter tenor, many small loans instead of one large loan. So this is all, again, so how do I judge it? As a lender, now I have a lot of tools available like our UPI, account aggregators, open APIs. So, these are the rails that we are now, the new age or the tech-enabled companies can, lean on and start lending and making judgments. So the customer, as you said, customers are, you're talking about attention span. Now customers are now looking at merchants or borrowers are looking at faster, smaller number of loans rather than taking one large credit and then trying to service it.
So you're saying that it's become much easier for you to provide loan because of the data, and it's also become more bite size.
Yeah.
Perfect.
Shorter tenor.
Short term, frequent, and that also allows us to then check the quality of the portfolios and all that. Shashank, hugely inspired by the work which you guys are doing at Axio. I must say, truly transformative. How have you seen this change when the finance has got embedded into the purchasing process? How you're seeing hyper-personalization and those kind of things which your company is driving? How are you changing the demand as well as supply patterns?
Thank you very much for having me here and for that question. I think to Mr. Chakravarti's point, when we look at this opportunity of the next 100 million customers, I think the single biggest challenge that any lender will bring up is credit risk. And how do you manage that sustainably? And the reality is that the amount of data you have to underwrite these customers will always be finite, right? And not perfect. And the single biggest way that we've seen you can actually manage risk while extending credit to the underserved is by designing credit products that then themselves are less risky, both for the customer and for the lender. And there are really three kind of levers we've seen to do this, right? The first, as Mr. Chakravarti said, is to have them be contextual. Offer credit at the point of need when someone actually is looking to buy a car or a phone or a fridge, or a business is actually buying supplies or procurement, rather than calling a customer during his lunch hour at the office, right? The second is end-use control. Disburse the funds for a specific end use, right? Finance a particular purchase as opposed to cash going into a person's bank account to be repaid back over 3 years. And the third is creating positive feedback loops, right? The challenge in a lot of term lending, which is 2-3 years, is it takes a year to figure out if the customer is actually a good payer or not, right? In these shorter term products, and you can call them, buy now, pay later, or embedded finance or supply chain finance, if it's structured correctly, because short term products can also be risky, you can create these feedback loops where you see a customer pay down the loan fully, right, before extending them further credit. And they can see a positive feedback loop where as they repay and build history on you, they can also unlock larger credit products that meet other needs, right? So this form of credit, right, whether it's an SME using it to purchase supplies on a digital marketplace or a consumer purchasing a product online or offline, I think are starting to create these kind of bite-sized sachet opportunities to test credit for the next 100 million customers and help them also climb the credit ladder over time.
Please.
Just to add what Sashank is saying, probably in future, I think the checkout counters will be the branches for a lot of lenders.
Absolutely. We don't need so many branches somewhere away. The checkout counter, the POS, the link which you go and pay actually is the disbursement point. And I think you talk about the whole sachet concept. We have seen the sachet economy grow in India, whether it all started with shampoo and other things. It really takes off if it reaches the right level. So the distribution is as important as the product creation. And I think that's something which I'll come to you in a little bit, but I'm actually quite curious to hear Mr. Vasudevan's view. We are talking about 100 million new borrowers. What do you think, sir? Are we ready?
Thank you. Always nice to be moderated by a consultant and be on a part of a panel where the fintechs and NBFCs are here. You mentioned about the prelude. No, you get less than 7 seconds now. But actually, that's precisely the time you also get nowadays to assess a borrower's credit worthiness. That's how it is, whether it's a checkout finance or whatever stage. You have to be ready for it. Yeah, according to me, the present credit needs of the ecosystem are not being met at all. No, there is plenty of scope for us to meet the credit needs of the Gen Z or whatever you call. No, they are still much in need of that. And whatever they do, one advantage you have is that they are having a digital footprint. So that can actually help you prepare a credit history for them. So once somebody wants credit, you have to make them credit worthy. How do you make them credit worthy is to assess whatever footfalls they have given. For example, I have some data points like if you look at AutoPay and UPI, okay, the latest number I get is that there are 350 million AutoPay mandates presently active on UPI. That itself is a good data point you have because that is a need that they have created for which they are making a payment. Maybe for a bill, maybe for a consumption they have made, they are taking a EMI, whatever, they have created a mandate. So that number is already available. So you have a active base of 350 million. And I know what was the number that was till now, right from the time this AutoPay mandate process or feature was set up on UPI, we are talking about 900 million. So we have that number. Second number, if you look at, as on date, we have around 112 million credit cards. So somebody has assessed the limit, somebody has already assessed the eligibility for a credit card. So you don't have to do much if you just tap into such customers or such clientele. You already have a ready-made base. And of course, there are so many other launches that happened here today about Bharat Bill Connect, etc., the bill payments, the ecosystem. Of course, Axio has got lots of information about how the platforms are behaving, how the merchants are delivering. All those data points are there. So I am not at all worried that you will have difficulty in finding this 100 million. My only worry is how are you going to provide credit to this 100 million? So that's one thing I am very happy if the supply of credit is much more than the demand. So that's the world to begin. It's like a first world problem. You have plenty of songs, you don't have time to listen. That could be one way of looking at it. But I want us to believe that finding the customer should not be a problem. Just like we had a scenario earlier when a customer used to walk into a bank branch and then he was a customer of the branch. Later, because of core banking and other benefits, including mobile and other gadgets available, he became a customer, he or she became a customer of the bank. Slowly, it is possible with more innovations coming in, with more platformatization happening, that he or she will be a customer of the banking system. So each one can benefit by giving a better service, by having a better way of assessing the credit servicing capabilities. So I feel that it's a nice problem to have.
Thank you so much, sir. So the clear takeaway I have is that it's not hard to find the borrowers, but it's important to find the lenders. So do we have enough supply of credit versus we have the demand of credit? And I always wonder that there is credit available for those who don't need, and it's not available to those who actually need. So hopefully we will be able to try that someday. But I'm glad that you found that a moderator by a consultant to be a nice part of it. Most of the time I get a kick on my backside, so today might be one of the good days that I'm here. So thank you so much for being generous. We can have a side deal on this one. Thank you for that. Yeah, money, I have lots of people to give me. The problem is that I need to live on my trust and reputation. So thank you so much for enhancing that. I want to come to Shashank. There are important point which I think everybody keeps talking about, that technology will solve a lot of problems. And one thing which gets thrown around all the time, I've heard, I think AI 100 times in the last few hours itself. How do you see the technologies like AI and machine learning or some of those related technologies playing the role in your process?
It's a great question. I'll start with where I think that technology has actually solved a big part of the value chain, and that is in Mr. Vasudevan's point on distribution. I think today you can actually reach out to the next 100 million borrowers digitally at a low CAC and a low servicing cost. And what has actually made that possible is not just technology, but the public rails that have been laid out as part of the India stack, right? eKYC, UPI, etc. And we're very fortunate to have that infrastructure. I think when it comes to the challenge of assessing credit, technology still has a long way to go for two very simple reasons, right? The first is explainability, right? The only way to scale a credit business is to be able to understand, audit, assess and improve credit models by looking into them and understanding what they're doing and how they work. And today, AI does a lot of cool things for us, but it's a black box, right? And so the traditional work of going through a person's CIBIL report, looking at a bank statement, I don't think these are going away. Where AI can perhaps help is improving the ability to process these more efficiently and more accurately. But until AI is able to actually explain itself to a human being, I think we're some ways away from seeing it underwrite. I think the second problem which we spoke about earlier is the problem of accuracy and hallucination. Financial services, like healthcare or other sectors, is a business where accuracy is important, right? The difference between a 2% NPA and a 6% NPA can be the difference between life and death for a business. It can be the difference between a stable financial system and one that spins out of control. For a borrower, it's a difference between having a good credit score and never be able to take a loan again, right? So having models that are able to deliver reasonable accuracy but can be completely wrong 5 to 10% of the time is a real problem in this industry, right? And therefore, I think human beings will have a role, not just in designing the models, but in auditing them and understanding them. And I think that probably the model that we will see for a while is the co-pilot model, right? Where AI tools can make human decision makers, modelers, risk managers, CROs more efficient and more effective. But that role of judgment, I think, is going to be around for a very long time.
Thank you, Sashank. I think the 2 points which you made stick with me, and I'll repeat for the benefit of everybody, is you definitely can use AI for many, many things, but until you can prove how a particular decision was made, it's hard to apply in every situation. Although a lot of AI today seems to be reasoning and also showing their reasoning, but I think it's still far away from where things are. In fact, I'm actually reminded every time when things like transparency comes on AI, there's a story about 140 years old. There's a guy who was once asked to build an autonomous machine which could beat players on a game of chess. And he built this machine after several years. And this machine was called Mechanical Turk, which could actually get anybody to play chess against it as a machine, and which played the chess, and it could beat a lot of players. And this machine became very popular in Europe. Only after about 20 years, they discovered that the machine was just a combination of levers and prism, and there's a guy sitting under that machine who was actually playing the chess. And of course, they chose the guy to be a very, very smart guy. And Wolfgang later on thereafter was, he of course got the imprisonment and other things. So I do see a lot of time till I get that transparency, which I don't think that the AI today gets, is challenging. But the second part is hallucination. Although, as I said, as a moderator, I am not allowed to make comments. I've been told very specifically by the organizers. But I think the story about hallucination is getting better faster than we would imagine. And I don't meet any industry which says that the accuracy is not important. I think in every business, accuracy is important. And still we apply AI with some reasonable degree of safeguard. So, but I think the 2 points which I hear is explainability, transparency, and the second one is hallucination, which is very important. So as you look at AI being the one solution for all problems, it's not as there yet. I want to turn to you, Mr. Chakravarti. You guys have seen big shifts, again, using technology for doing different kind of things. How has technology helped in your businesses? And how do you see technology, not just the machine learning and AI, but the real technology improving, if possible, the supply problem?
See, I'll put it this way. For us, technology is an enabler for my borrower and for my team, basically to connect to each other and come to a solution much faster. So, what all can you use? In fact, as I've explained to you about my first experience to today, in fact, there are certain cases where when the data availability is there, I can take a decision for disbursing a loan to a customer within a couple of minutes. But then that is for a customer where I have data. Now, if you're looking at a thin file, where according to the bureau, where you call them thin files or new to credit, how do you assess him? How do you lend him? Is where I think some of the technology, we are taking the help of some of the technology, as I was explaining, either POS machines, his UPI transactions, or consented data from an account aggregator, or from his transactions on a mobile, or his wallet, top-ups. You know, you build an algo on all this and then understand that what is his basic cash flows. But end of the day, as Sashank was saying, unless there is a person sitting there and taking a call, you're going to mess up. But what is this helping is a transaction that was taking me a couple of days' time today has shrunk. And I'm able to do it much faster at a lower cost, which is also benefiting the customer because I'm able to pass on that cost saving to the customer.
Thank you so much. Let me turn to you, Mr. Vasudevan. Two perspectives I want to blend in for you to give us some views. The first one is public-private partnership. How do you see our world getting better with public-private partnership? The second one I want to bring in is this digital literacy, or the lending or financial literacy is also an area of concern in the general population. So how do you see the future both with the public-private partnership, and what should we do to improve the financial literacy?
Public-private partnership is inevitable, actually. You have to depend on the private sector maybe to reach out, and you have to depend on the public sector for you to fund out as well. So typically that has been the experience so far in the lending space. Even in the payment space, that has been the way the reach out has happened. So that is going to continue. But couple of things I just thought I also mention about technology when Sashank and Chakravarti were mentioning about AI. It is possible to use AI for a couple of things when you assess, especially a borrower's potential. Also, the manner in which some of his behavior has been in the ecosystem, it's possible. For example, I can talk about the Mule Hunter that we have developed as a solution to look into the way in which the accounts get manipulated, how those money is moving in and moving out. All those things can be definitely tracked using this package. And we do welcome, say, non-banks also to come and join, because they can definitely also add value by way of saying how the money went in and how the money is going out as well. It is possible, so we can look at that. And we want to typically also avoid those type 1 and type 2 errors when we talk about technology, depriving a good borrower or a person with credit history of credit, and again giving credit to a person who doesn't deserve. So we have to manage, it's a bit of both. And in the process, we do know that the literacy, what the customer is entitled to, and who can all give them this entitlement, give them this money, should be very clearly known. We have those people who are registered lenders, banks, non-banks, people who are not, and definitely some of those rates from those who are not entitled to lend will be much more than what she or he can afford. So there are those things, and we have brought in those key fact related requirements. So digital literacy is again a must have, and everybody should collaborate towards this. This is where the partnership really helps, public private, because no single entity, no single person can take care of this literacy related requirements. Everybody has to blend together. And thankfully, now that the digital access is there, so we can also customize it using technology to one's language, to one's manner of understanding things. So we can make it as lingo free, as using some jargons, etc. We can avoid those things and still make digital literacy possible. And of course, many of those features and apps are now available that when you actually borrow, then you are also expected to keep a track of how the repayments are to happen. So you can keep an alert using those technology and those mandate related things which I was mentioning as soon as you borrow. My best suggestion to everybody has been that moment you borrow, set up a e-mandate as well, so that you will also have a periodicity in repayments, and those can be from monthly to weekly to daily or whatever is comforting you. So there are different ways technology, I think, can help, and we should use that, because when you're looking at a small value loan, I still feel that it can be faceless. It can still be time-wise quite fast as well. And if you look at meeting the person and then deciding to give a loan or not, it's going to take time. I don't suppose anybody has got that patience. I go back to your prelude example, so I come to that.
I think if there's nothing else, my prelude example is going to stay for some time. So get there faster, sooner, because nobody has time in life. I want to ask you a question, Shashank, a little bit controversial. And this is my intersection of economics with the philosophy. See, credit is the backbone of any economic development. If you choke credit, you choke the economy. But there's also, if you throw too much credit, you drive inflation and many other things. Especially when it comes to B2C credit, there's also a big issue about how do you use technology to reach versus how do you use technology to nudge for people to make those buying decisions which they never wanted to make. Do you deal with that dilemma, and how do you solve it?
We absolutely deal with that dilemma, because I think when you're lending to the next 100 million customers, you also have to, in some ways, figure out how to help them make good decisions. You can't just say, I'm giving a loan and I expect the customer to pay. You have to design the product so it's easy for them to repay, which means you actually need to assess their ability to pay at a granular level and construct the EMI schedule in such a way that they will be able to pay it, right? It means, to Mr. Vasudevan's point, you have to be transparent upfront with the terms so they do not end up in a situation where they do not realize that they are taking a loan with XYZ interest, fees, etc., right? So I think, yes, technology, because it makes things faster and reduces friction, can create overuse. I think the challenge is, how do you actually use technology to raise the bar? How do you use it to KYC customers better? I actually think today, a V-KYC is a far superior way of KYCing a customer than having some agent go to someone's house and pick up a photocopy of a document, right? Underwriting using data and using tools to make connections, like Mr. Vasudevan said, is probably a lot more accurate than the old method where you just had a human underwriter looking at case after case, through the day. So if we can actually use technology to raise the bar on underwriting, raise the bar on compliance, raise the bar on customer awareness, because a lot of these experiences are not intermediated, right? The traditional lending sector had a lot of intermediaries. We are now actually creating direct interfaces with the customer to educate them on what product they're taking.
Thank you. I'm conscious of time. We've got about a minute left, and I have one last question to ask all of you. And if time permitting, maybe one super fast rapid fire question, maybe two if the time permits. So let me start with you, Mr. Chakravarti. What is your advice to lenders?
So
you can't give away your trade secrets. Right?
No. There is no trade secret. There is no trade secret. See, I keep telling people that in lending, distribution is very easy. Distributing money is the easiest part. Collecting is the toughest part. So that means when you are lending, you need to make sure what is the purpose, why is the customer borrowing, how much is needed, and how can he repay. These are the three questions I keep telling my team, that If these three questions are answered, your lending is safe. So, I mean, you can't run away from fundamentals. Whether you're doing a digital lending or you're doing a physical lending, end of the day, you need to understand how much is required, what is the purpose if you understand, and then the repayment capacity automatically you need to understand. So these are the things that I say to any lender. These are the three other fundamental questions to be answered before you take a credit risk.
Thank you. Mr. Vasudevan, you already talked about the advice to the consumers, which is set up the e-mandates and all that. What's your advice to the lenders?
Simple thing is that they should lend. No, they should make it also affordable to the ones who want to borrow. And it's very easy because of the data points available to segment the customers into various categories, maybe age-wise, purpose-wise, and accordingly lend. So when the lending is very easy, we can see that the lenders are all there. The rates are also accordingly not in favor of the borrower. So I feel that you have to look at this as a partnership so that you make money only when they feel that it's worth borrowing from you. So I want the lenders to be transparent, to make the borrowers feel that they can trust a particular lender. And of course also bring to the notice of, I won't say regulator, but the ecosystem if somebody is not eligible to lend but is still lending. So there are different ways in which you can play the game, and I want this message to be given to the lenders.
Thank you so much, sir. Shashank, your advice to the borrowers?
I think start small and build from there. There's a lot of credit offers out there in the market the moment a borrower establishes a credit history, right? But I think at the end of the day, like just managing leverage at an individual and household level, being on top of it, using a lot of the apps out there that Mr. Vasudevan mentioned to be on top of your finances. I think that's that those basics never go away. And the more credit worthy you get, the more credit there is on offer. So one has to be careful.
Build your credit worthiness for sure. Last question, quick one, starting with Shashank. One technology which you wish was not developed?
Digital advertising.
I thought a lot of people survive on that, but that's it. Chakravarti, anything you'd like to take, a technology which shouldn't have been built?
No,
Say digital advertising for loans.
Suddenly, somebody from Amazon is coming after you.
So I don't blame anything on the technology side. It is the user that has to be blamed. So technology.
All technologies are good. How do they get used? Sir, anything you'd like to take?
I don't want to look at unwinding something that has already been done. So whatever is there has served a purpose at that time. So let's use that. Let's leverage on that. There are so many other technologies which I would have loved to talk about, maybe some other occasion, ULI, other things. There are so many ways in which we can facilitate lending, democratize, etc. Maybe CBDC programmable can also take care of Shashank's issue about end-use monitoring. We can discuss on a separate, maybe a cup of tea or in the stalls down below we can discuss. But I am also conscious we have short our time. She is already waiting, so I'll just hold back.
Thank you so much. With that, let me first thank all of you for this wonderful conversation. Let me thank all of you for listening in. I do want to say with a confession, all of us at some point have borrowed something. Either somebody's Netflix password, or maybe a charger to charge your phone, or pen to write, or even a loan to buy that car, which looks much nicer in a showroom than it looks on Mumbai traffic. Lending is the business on which the economy grows. Borrowing is a habit on which the economy grows. So I do hope that we continue to drive. The money sitting in bank doesn't do great favor. It is best put for some productive use. So those of you who are interested, I think you should lend, as Mr. Vasudevan is saying, or those who can afford to get credit when it is available at affordable price to it. I do hope India becomes a lot more credit-worthy, credit available at a point when we want, rather than getting at a point when you don't. I couldn't have asked for a better panelist, so thank you so much for those words of wisdom. I'm much more wiser today than I was about an hour ago. Thank you so much, sir.
Thank you. Thank you very much indeed to all of our speakers. I think we managed to gather some very interesting nuggets of insights as well.